muted.
We have a gap up from a tight range and therefore a potential final flag. And look where we are on the daily chart. We're in the upper half. We're back in this trading range. The market's deciding whether it's having a bear breakout that fails and reverses up. We have a bear breakout that fails and reverses up. I think more likely we're getting this. A bear breakout that fails and reverses up, but does not go to a new high and eventually gets a second leg down. So I think that right now it's more likely the reversal up that we're getting will be a lower high. And here it took 2 months to get the second leg down. I don't think it'll take 2 months this time. Also, this second leg down is not very far. I think the second leg down this time is probably going to eventually work down here. I think this is a bull leg in a trading range. And right now it's more likely than not that this is the start of a bear leg in that same trading range, and that we're working down here. If we continue up, 1 or 2 more good bull days, I think the odds will shift in favor of the bulls. One more new high. But even if we get the new high, I think there'll be sellers above. There were sellers above here, sellers above here, sellers above here, and probably sellers above here. There'd be again at the top of the channel, and there would be an expanding triangle, up, down, up, down, up, probably down. I think we're putting in a top for the next 2 or 3 months, and the market's deciding whether or not the top is in. I think it's more likely that it is, but obviously if we get 1 or 2 more bull days, the odds will shift in favor of one more new high. We had a pair of doji bars, and we had an outside down week last week, and this week we're inside. So right now it's an IOI in a 5-week tight trading range. Still not close to the moving average, which is extremely unusual. I think we'll get there by going sideways or down. I suspect we'll go down. I think we'll probably come down to this area. So a spike, pullback, and then wedge channel, 1 or 1, and then 2, and then 3. So I think this is a reasonable target. This is probably a final flag. And it might take, it took 3 months to get up there. It might take 2 or 3 months to get back down here. The channel is so tight, the reversal will probably be minor, which means that bulls will buy the reversal and we'll get at least a resumption back up. At that point, we'll have a trading range, and it might be big enough to create a major reversal and get us down here, 1800. I think we'll get there within a few years. All right, so you can see, traders sold. Here we have a gap up after yesterday's strong reversal up, and what did traders do? They sold. And this is what I was saying, that I think it's more likely the rally is going to be a lower high. 60-minute chart. Very tight bear channel, bull breakout, probably a minor reversal in a trading range. The bears see a double top, and the bulls are hoping that the sell-off forms a higher low, and then we resume up to a new all-time high. In any case, right now, this is probably a final flag, and it makes sense that bears would sell the gap up. If I were not talking, I probably would put up a 1-minute chart and sell as soon as I see that 1-minute bear close. What do you do right now? Do you sell below 1, betting that it's the high of the day? If it closes near its low, it probably has a 25% chance of being the high of the day. Yesterday I said 25 to 30% chance this was the low of the day, and right now this is probably 25% chance that it's the high of the day. Room to the moving average. If it closes in its lower half, some bears will sell the close for a scalp, looking for it to test down to yesterday's close in the moving average. For bulls to buy the one close, I think most bulls will not buy it. They'll wait. Let's say it closes back at the open. To me, the location is good for the bears. We got a lower high, double top, lower high, final flag, 3 pushes up, 1, 2, 3, 1, 2, 3. bear close, you can see, look at the open of 2. It's below the close of 1. That tells you that a lot of bears, as soon as they saw a bear close on 1, they just sold the market, looking for a test down to the close of yesterday in the moving average. I said that I often do that if the close is in the lower half, or a 1-tick bear close like I guess it's a 2-tick bear close. I think it's less certain, but I do think we're going to get down to yesterday's close. We might go up a little bit more first, but I think we're going down to yesterday's close at some point early on. There's an expanding triangle here, 1, 2, 3, 4, 5, or we can use any of these highs, 1, 2, well, I guess, 1, 2, 3, 4, or 4, 5. This is probably the best one. Yesterday spent a lot of time sideways. Probably will continue today. Remember, the bulls want this to be this. This is a low probability event, and this is even lower because the buy climax has lasted more bars. So probably lower high, which means probably sellers, we're around a 50% pullback, we're around the sell climax high. So on the daily chart, this is the sell zone for at least a scalp down. Bulls want an opening reversal, a sell-up to support like yesterday's high, and then a reversal up and a trend from the open bull trend like yesterday, but probably not going to get it. Odds are against it. What do you do if 2 is a bear inside bar closing in its low? Are we always in short? Well, it depends on how big the bar is. If it's a good sized bear body, then we're probably short, but I think the bears are going to have a hard time falling below this trading range. The market thinks this is a good price, and if it gets down to that good price to buy and a good price to sell, that's why it was going sideways. Anytime it goes down a little bit, the bulls buy. Anytime it goes up a little bit, the bears sell. I think there are buyers below 1, but I don't know that they're at the 1 low. They might be 1 point below because we have magnets just below moving average in yesterday's close, and they're about 1 point below. Should be buyers 1 point below 1, and which is where we are. We're back into yesterday's tight trading range. We have 2 dojis for the first bar, and we're back into yesterday's tight range. That increases the chances that today we'll have a lot of trading range price action, and it also increases the chances that despite 3 bear bars and the market now always in short, we'll probably have a trading range open. In other words, we'll probably go sideways for the first hour or so. I think a bull trend day is unlikely, even though the bulls are hoping, like I said, that we're like this, 4, 5, 6, 7 bull days. 1, 2, well, not 3, 4, 5, 6, 7. We're probably going to get a lower high. I think if today is a bull trend day, it'll be a weak bull trend day and not go up very far. These 3 initial bear bars make a bull trend day unlikely. The bears could get a big bear trend day, but I think that is unlikely as well. So if today is a bear trend day, and right now we're always in short, it's probably not going to be a strong bear trend day. So in other words, it's probably not going to be like what we got over here. We're probably not going to sell off relentlessly. If it is going to be, or like this, if it's going to be a bear trend day, it's probably going to be a weaker trend day. We have an expanding triangle, top 1, 2, 3. If we get down here, the bulls will try to get an expanding triangle bull flag, 1, 2, 3, and a double bottom down here. We have support at the 60-minute moving average. I don't think we're going up. So to me, it looks like a confusing picture, and that usually results in mostly a trading range. This was the sell zone for the bears. We're in the buy zone right now, testing yesterday's close in the moving average. And then the low from 2 weeks ago was an important price all day yesterday. We're testing it again. So when I say a trading range open, what I mean is we'll probably get a leg down, which we have, and a leg up, and then test down again, and then the market will be in breakout mode. We'll have a reversal up, a reversal down, and then the market will decide on the direction of the first swing. We'll get a reversal down, that'll be a double top, and then once we go down, we'll try to form a double bottom, and then the market will decide whether to go up or down. This does not look like the start of a strong trend day. Those two dojis make a strong trend day less likely. The gap up was small. If it was a bigger gap up with a big bear day, that would allow the market to gain momentum going down, which we did not have. If we gap down to the 60-minute moving average, below the 60-minute moving average, and had a bear day, that would increase the chances of a big day down. But that's not what we have. What we have is a pullback into a 5-hour tight range. Important bar here, bar 4, right? The bulls are trying to get an opening reversal up from support. The low of 2 weeks ago, that green line, yesterday's close, the moving average, the bottom of this trading range. And the bears want this to be a big bear day. They have a gap right now, 2 low, 4 high. Right now, since I think this is probably going to be mostly a trading range open, I think the odds are that gap will close. But, we may have to get below 65 before we get the reversal up, an expanding triangle bottom. Again, I'm expecting this rally to fail. I'm expecting a lower high, and this looks like a lot of traders are also expecting a lower high. Can you buy here? Yeah, although I'm not long, I think traders will be buying 1 point below 1 at the moving average, at yesterday's close, at the low from 2 weeks ago, at the bottom of this range, expecting the gap below 2 to close. Look where we are, right? Yes, we've sold off for 4 bars, but look where we are. We're still in the middle of a tight trading range, and limit order traders usually get rewarded trading with limit orders in a tight trading range, and therefore we should get back above the 2 low. 4 bear bars, a trend from the open bear trend, but 3 with prominent tails, and we're in a support zone. So yes, always been short, but a lot of traders will look to sell a pullback when the initial sell-off is weak. Rather than selling closes, they'll look to sell higher. Bitcoin, to me this is crazy. Most investors don't want to be buying high like this. If this is going to be a substitute for gold or a currency, a lot of traders, a lot of individuals, me, right? I don't want a safety trade to, go up 30 or 40% in a few weeks, or down, 20 or 30% in a few weeks. To me, that's not safety. So Bitcoin has a lot to do before traders view it as a real safety trade and not simply speculation. And right now it just looks like a speculating market. Four consecutive bear bars, right? Are traders going to buy the opening reversal up above 5? Well, if they do, they'll probably scalp expecting a lower high. We should get up to the 1 low. Maybe, I think we'll get 1 tick above 1. I think it was reasonable to buy the 1 low, although I would not. I would be buying, since there's support a point lower. To me, I would not buy the 1 low. If I'm looking to buy, I would buy a point lower, or with a limit order at yesterday's close, which was also a logical target. It's still sell the close, but only 1 decent bear bar, and we're at a price level where the market reversed repeatedly yesterday. So this is more of a scalping limit order market than a sell to close trend type market. Can this be an opening reversal up from yesterday's close and an early low of the day? It's possible, but not likely. Probably the best the bulls will get is a lower high. You can see it triggered by one tick, and you have a lot of bears selling at the 5 high, trying to prevent the bulls from getting their opening reversal. But the odds are we're going to go up at least another tick or two. I don't know that we get above the 1 low. It's possible that the bulls get trapped, but I think we'll get to the 1 low. In a trade like that, where I think the market is going to touch the 1 low, but I'm not sure it's going above the 1 low, I want to be buying at least 5 ticks below the 1 low, which I did. I bought at the close of yesterday for a 1 point scalp. I don't know that it's going above the 1 low. It's possible that the bears get trapped. Some bears bought with a limit order at the low of 1 and then more 1 point lower, and the bulls are trying to trap them. I think we'll go up a little bit higher, probably testing yesterday's high again. And the bulls hoping this is just an opening reversal up from support. Sell off to the moving average, opening reversal up, low of the day. This is also a double bottom, which is good for the bulls, and it's in a bull trend. Yesterday we did not have a big trading range there. Opening reversal. Here, reverse up, reverse up, reverse up a third time, opening reversal after a sell-off. This is not really, I wouldn't call that an opening reversal up. You could call it a wedge. Sell off to the moving, sell off a little bit, reversal up, a little bit, reversal up. Here, a double bottom. We sold off for 8 bars, but a double bottom at the moving average, reversed up. Sold off a couple legs down to the moving average, reversed up. A lower high is more likely, and bears expect the lower high, right? So they'll be selling somewhere around here. We have 2 decent consecutive bull bars. We're testing yesterday's high. I said, that would be, when the market started to turn up, I said one obvious magnet would be here. Can you sell here and put a stop above 1? Right now, I think you probably could for a scalp. Stop entry bears probably are not going to sell below 7 after 2 decent bull bars closing on their highs. So when you look at this is what I'm saying, that it's a confused open, and when you have a confused open, usually you go sideways for an hour or 2. You get a double top and a double bottom. So, here we're trying to get a double top, maybe a little bit higher, and then we'll sell off, and then we'll get a double bottom, possibly a higher low, lower high, and then sideways. Like this, confused open, double top, double bottom, and then the market's deciding what the direction of the first swing will be. For the bears, a second test of yesterday's high, so a second reversal down from yesterday's high, but the 2 bull bars are a sign of strong bulls. And just like I said, we probably would get a lower high after the 4 bear bars. We'll probably get a higher low after the 2 bull bars, which means we'll probably go sideways more. For the bulls, this sell-off is a bull flag, opening reversal up from support, and this is a breakout of the bull flag, and this is a pullback from the breakout. For the bears, this is a reversal down from yesterday's high. This is a second reversal down from yesterday's high. They want to break below the neckline and a measured move down. I think it's slightly more bearish than bullish, but I also think it's probably going to go sideways a little bit more. Because look to the left. What has the market been doing? It's been reversing every few bars, and we're in the middle of that. Reasonable swing short, taking a chance on the high of the day, but more likely we're going to go sideways more. I still think if today's going to be a trend day, a bear trend is more likely than a bull trend, because I think a lower high after that strong sell-off is more likely than a resumption of the bull trend. This is strong enough so that we probably have to test back down. Typically, when you get a second failed reversal at yesterday's high, you want both reversals to come from above yesterday's high. And it's better if the second one's above the first. It's a higher probability short. But sometimes this is what you get. You just simply get some kind of a small double top around yesterday's high. Bulls trying to get a second reversal up. Remember I said we might get a double top and a double bottom, and then the market enters breakout mode. It's important for the bulls to try to get a little reversal here, because if they do not, then the bears have an increased chance of getting a swing down to the 60-minute moving average. Bears trying to get the breakout and measured move down, trying to get a gap. They failed to maintain the gap below 1. They're trying to get a gap here. They have a decent setup. Again, the odds of a big bear day are not very good, but a small bear day or sideways to down day have pretty good odds. Right now, I would say better than a 50-50 chance, maybe 70% chance we've seen the high of the day. Remember, we have a limit order market, so bulls bought the 4 low, they bought the 79 low, or they bought 1 point below 4, and they need one more tick. So this gives us useful information. Will 10 get 1 tick above 4? It probably will. Look to the left. Traders buying below things have been making money now for, 80 bars or so, and therefore you have to assume that will continue until it clearly does not look like it's going to continue. So this is good for the bears, but it's not good enough yet for traders to believe that the character of the market has changed. Limit order traders have been making money now for 60, 70 bars, 80 bars. You can see the bears had limit orders to sell at and below 4, trying to create a gap, and so far they look good. There are bears buying here. The bears are sold below 7. A lot of them are looking to take partial or full profits at 4 points. And right now we're at 17 ticks. A lot of them will be concerned that we didn't sell off fast enough, and they'll try to get out with 15 ticks profit instead of 16. So a lot of times you get a 17 tick sell off and then a bounce. We're at 17 ticks right now. Stop order bulls tend to look pretty good. We have 3 decent bear bars. The stop order bulls will only buy above 10 if it looks like 5. They'll want several tick bull body closed on the high. Remember, expanding triangle 1, 2, 3, 4, 5, and now expanding triangle down 1, 2, 3, 4, 5. Also, other ways to draw it 1, 2, 3, 4, 5. Triangle is a trading range, and markets usually try to reverse in trading ranges more likely than breakout. Eventually there's a breakout, but it's higher probability to bet on reversals. To buy above 10, I think the bulls really need a great looking bar after 3 decent bear bars. A lot of the bulls will wait for a second entry buy, so up and then down and then up a second time. And the bears, good location to take profits, the bottom of the trading range, 17 ticks below 7. Still always in short since bar 1 or bar 2. But weak bear trend day or trading range day likely. We could still, sometimes you get these dramatic sell-offs early in the day, and then the market just channels up for the rest of the day. And it's possible that this is one of those days. And therefore, if 10 is a decent bull bar, bulls will buy for a swing up, taking a chance that this is the low of the day and that we just channel up all day. I would get out of shorts above 10 if it closes on its high. It's an okay swing buy if it closes on its high. For a scalp, I don't know that the probability is high enough. We've had a lot of reversal days lately. Big sell-off on the open, it reversed up the rest of the day. Big sell-off on the open, reversed up the rest of the day. Here, it took a couple hours, but we reversed up. 3 legs down, reversed up. 3 legs down, reversed up. Big sell-off on the open, reversed up. Reversal days, usually, if the initial sell-off is pretty big, usually the best the bulls get is a bull leg in a trading range. If the initial sell-off is small, like this, a reversal up can lead to a big bull trend. But if the sell-off initially is big, usually the best the bulls get is retracing a lot or all of the initial sell-off. And so yes, we reversed, but we didn't go up for a measured move. We just got back to where we started. Bears trying to prevent the reversal from triggering. They're selling at the 10 high, trying to prevent the bulls from getting a buy signal. I would get out of shorts above 10, and I'm not opposed to buying. We're still always in short. It's a possible low of the day, so it's a reasonable buy. Another thing that works against the bears is location. Daily chart. This sell-off is so strong, we probably have to form a lower high. And we're fairly far up. We're more than 50% up. And that works against today being a big bull day. So it works against getting a big reversal up here. This would be a micro double bottom. We went down on 10, up on 10, down on 11. So now if we go above 10, that would be a slightly higher probability for the bulls. Can you sell on a stop below 10? 10 is a pullback from the breakout below yesterday's trading range, and therefore it's a low one sell signal bar. But I don't know. I think we'll have a hard time getting below the 60-minute moving average, so probably not much left to the downside. We have a tail 1, tail 2, reversal up on 5-6, good bull bar 10. A lot of trading range price action, bad follow through after the bears got sell-offs. Limit order bulls made money below 1, made money below 4. I don't want to. When a sell-off looks like this, I usually do not want to be selling at the low. I want to sell pullbacks, not breakouts. 60-minute bar, an outside down bar, but also a tight trading range. So, and at the daily moving average. So, not yet a convincing setup for the bears. Double top, but at support and still tight trading range. Who's going to sell on a stop below 11? Even though we're always in short, I think a lot of traders will not sell on a stop below 11. We're not getting good follow through and we're hesitating at support. Remember, the bears are still short, right? We still did not go above a bull bar 10. Final bar of the hour. The bears would like the bar to close on its low below the tight range, and the bulls would like the bar to close at least above the low of the last hour, at least above this low. And the bulls would love to get a big bull reversal, a big bull bar closing somewhere up here, and that would increase the chances that instead of a bear trend day, we'll get a reversal day. If we do get the reversal day, I think it'll end up mostly as a trading range day. I think we will not break strongly above the high of the day. The high of the day is close enough so that we could get back there, but if we do, I doubt that we'll break strongly above it. So I think the best the bulls will get today is a rally somewhere up in this area. And for the bears, they have a bear trend right now, but it's just not looking all that bearish. So probably it'll be a bear leg in a trading range and we will get the reversal, or it'll quickly turn into a trading range. So sell off and then trading range for a few hours and then decide between trend resumption down or trend reversal up. So swing buy above 10, maybe high enough probability for a scalp, and always in bears I think should get out. Bulls wanting higher probability, they have to wait to see if we reverse up strongly. You know, do we start getting this? If we get this, then it's high probability to buy at the market and look for a swing up. You know, if we get that or this, it suddenly becomes high probability. If we start to get a series of bull bars, the market can become always in long. Here we had to test down twice before we could continue up. Okay, if you get something like that, then clearly strongly bullish, right? Probably not going to get anything strong. Just like it was disappointing for the bears, doji's bull reversal. Just like it was disappointing for the bears going down, usually it'll end up being disappointing for the bulls going up. What do the bulls do? Do they get out below 11 or 12? A lot will. They'll get out below 10, 11, or 12. But the reality is there probably are buyers below 10, 11, or 12. And this is a reasonable buy. And therefore, some bulls will say, it's a reasonable buy. If it's not the low, we'll probably get another attempt at the low down here. And therefore, they'll hold long, even with a 4 or 5 point sell-off, and look to buy more above a bull bar, betting that we'll get back to this price, or at least get in between the two entry prices. So if they buy above here and they hold through a sell-off and buy more above a bull bar, since it was a reasonable buy, they expect to be able to avoid a loss, if not make a profit. For the bulls, it's a wedge. We tried to go up, tried to go up, tried to go up, and an expanding triangle, but a fairly tight channel, and back in the middle of a tight trading range, so unlikely to race up strongly. The Ozen bears who got out above 10 theoretically have to be looking to sell again below a bear bar, either 11 or 13, but you're selling at the bottom of a tight range, and it's not a great short. Also, right now you're selling below a bull bar 12. This is what I was saying, that it's a reasonable buy above 10, but we may drop for 4 or 5 points down to the 60-minute moving average before we get back up to that 10 high. For the bulls, if they buy above 10, let's say you buy one contract above 10, and you're thinking about buying more on a reversal up, an alternative is to get out and then buy 2 contracts on the reversal up. Bottom of a tight range, not a high probability short, especially with the tails here, reversal here, reversal here, reversal here. So more buyers or sellers at the 12 low and the 10 low. Limit order bulls, probably buying 10 low, probably buying 12 low. The 10 low bulls have already made money. Some bulls who bought the 10 high, they got filled here, bought more at the 10 low, and their average price is right here, and that would allow them to get out break even if they wanted to get out, if they were so disappointed by this. And here's a 1 minute chart, and you can see it went above their average price. Difficult for the bears, right? I would wait for a second entry short. Or if we get a pair of big consecutive bear bars closing on their lows, then the bears can get short again. Bulls hoping to get another buy signal bar closing on its high. That would be a higher probability buy. And bears are concerned that we're getting too many bull bars at the bottom of the trading range. This is what I was saying, that a lot of bears would not sell below 11 or 12. If they exited above 10, they would wait for a second entry short. This would be a higher probability buy, especially if it closes at or near its high for a possible low of the day. You can see how it went outside up in the final seconds, forcing traders to buy higher than they want to buy. The buy, I think, is above the bull bar. Some bulls who bought above 10 held long, disappointed by 11, 13, and they get out break even. So part of this selling is bulls getting out or reducing their position. Remember I said that a lot of the bears who got out above 10, and I think it was good to get out above 10, would not sell below 11 or 12. They would wait to see if we get a second entry sell. Let's say 15 is a decent sized bear inside bar closing on its low, right? I think a lot of the always in bears will take that short, but they'll want the bar to have a pretty good bear body because it has to undo 10, 12, 14. Right now it's more likely that we're going up than much further down. Are we always in long yet? I think the bulls need to get a bull bar closing above 14, and that would make it likely that we have a swing up. At a minimum, I think we're going a little bit up. At a minimum. To me, this looks like we're trying to get a reversal day, a sell-off, and then swing up for the rest of the day, or swing up and sideways for the rest of the day. We've had a lot of reversal days over the past month. Prior to that climax, where we sold off and then up or sideways. Sold off and then up, sold off and then up. Sold off and then up. Sold off and up, sold off and up, sold off and up. Sell off and up. Sell off and up. Sell off and up. Sell off, strong sell off, still went up, right? So that's been a very common pattern over the past month. That increases the chances of it happening again today. Higher probability, you wait to see if 15 is a pretty good sized bull bar, and then you buy, but your stop right now is still below 13 or 14, whether you're buying right here or waiting for another bar or two. For the bears, a small expanding triangle, up, down, up, but location good for the bulls, the bottom of the trading range. A weak sell-off, bad follow-through. We have a wedge, a micro-double bottom, and 3 decent bull bars here. So I think buyers below 15, if it does dip below 15. For the bears, they want the resumption of the bear trend. They have an expanding triangle, which is a bear trend and a triangle, and a bear trend is a bear flag. But I think we're getting too many bull bars, and most bears will not take that short. Probably buyers below 16, below 15, below 14, below 13. When you get these reversal days, sometimes they reverse up abruptly. That does not look like today. Other days they just kind of channel sideways to up, and that looks like what we're probably going to do today. So the bears tried to resume down, and we went higher. Trying to find a weaker reversal. This is kind of a weaker reversal. A lot of overlap, a lack of consecutive big bull bars, but worked higher, sideways to up, for the rest of the day. Here's the reversal up that failed, and we got a new low. Today might be like this, but I still think the odds are we're probably going to channel up maybe 2 or 3 hours. Later in the day, maybe we'll stay a lower high. Confusing, right? Disappointing. probably buyers below. Just look at the screen. The range is bigger than this, but the general idea is the same. Repeated reversals and a lot of limit order trading. Are we always in long yet? I still think the bulls need to do a little bit more. So it's still always in short. So if we're going to get a swing at this moment, it's probably slightly more likely that it'll be down than up. But, it's really basically very close to 50-50. You can see they sold above 16, they sold above 15. They probably will buy below 16 and buy below 15. You know how I talked about this as being a second reversal down from yesterday's high. This is a second reversal up from yesterday's trading range low, but not a good buy signal bar. 13 and 14 forcing you to buy very high up. I still think it's slightly more likely that there are buyers below and that we're going to try to go higher. But I would like to see either a test down and a reversal up, or one more decent bull bar before I conclude it's always in long. We got a reversal, but not much follow through. We need something like this, some kind of a bull bar or 2 or 3 consecutive smaller bull bars to make it likely that we'll go up for a couple hours or more, possibly all day. For the bears, this is still a double top bear flag, even though this high is far below that high. Double top bear flag here, here, a lower high, but it's still a double top bear flag. Another one here. Double top bear flag here, took a long time to go down. Double top bear flag, double top, or triple top, you can call it a triangle. They never look like they're going to work. Here's a, similar to today, a sell-off and then a double top with a lower high that's much lower. And we just kept selling off all day. So that's why I'm saying that today, until we get a strong bull breakout, I think it's slightly more likely that we'll test back down. I don't know that we'll trend down like this. I don't think we will, but we might. For the bulls, the swing bulls, they're still long from above 10 or above 14. Swing bears are still short, but they'll, they can be still short. I would not be. I would be out of shorts, and I would not sell below 16. Below 18, that's probably a better short for the bears, a second entry short. These double top bear flags never look like they're going to work, but 40% of the time they go down for a measured move, right? And this is an example of a double top bear flag. You can call it a failed wedge, tried to reverse up second time, third time, or a pullback from the breakout below yesterday's range. This is what I'm saying, that the bulls need to do more. Maybe they'll get a higher low here, but a lot of bulls want a good buy signal bar. So they want 20 to close on its high and have at least a 2-tick bull body. If they get it, bulls probably will buy. When you have these double top bear flags, a lot of times as the market's turning down, you get decent looking buy setups, but they just keep failing. Here, bull bar, tried to reverse up again. It went above that bull bar, right? I'm trying to get it to crop. So this is a second entry buy, a higher low. Again, it's a reasonable buy for a swing up. The bears still have a chance that this is a double top bear flag that will trade down. You can see here this bull bar right here. I want to zoom in on that a little bit. Is it high enough probability for a scalp? I don't know if it's high enough probability for a stop entry scalp. You're at the top of a tight range with a lot of reversals down, but I think it's certainly high enough probability for a swing. Still not always in long, but if 21 is a pretty good bull bar closing near its high, then probably always in long. Market's still deciding whether we're in a bear channel or a bull channel. I think slightly more bullish than bearish, but those first two bars of the day, big dojis, were telling us that the market is probably going to be mostly sideways, lack of conviction. And then we're back in yesterday's tight trading range, and we're getting more trading range price action. Again, lack of conviction. Not a good context for buying. It's a higher low major trend reversal, probably not enough bars for a major reversal, and then top of a tight trading range. So far, bad entry bar, disappointing entry bar. Is it always in long yet? I really want to see a little bit more before I say that. I think the bears are probably out above 10 or above 14, and I don't think they'd sell below 16. They might sell below 18 and then get out above 17. So if that's the case, then we might get if we get above 17, it might be a measuring gap. It's not clear, right? And that's why we're in this 7-bar, 8-bar tight trading range. There's not a consensus that we're going up or down. The location is good for the bulls, and the signal bars have been good for the bulls, but they have not had good follow through yet. And if the market's in a bear trend, you often get strong reversals, but the trend down continues. Like this, strong reversal up, but the trend down continues. So it's, I think, very often a mistake to conclude the always in direction has switched too early. There's certain things you want to see. The bulls have good bull bars, but they're failing to get a strong breakout. I want to say always in long based upon location and the bull bars, but why have the bulls not yet had their breakout? Here's a bar chart. Sometimes I'll take a bar chart and flip it upside down to get a different perspective. Sometimes it's easier for me to see buying and selling pressure if I flip it upside down. So there's the bar chart. And for the bulls, the final flag reversal, you can go to cup and handle, rally, so a cup, and then a handle, trying to get the higher low. So to me, this is a credible bull flag. The chart's upside down, so on the 5-minute chart, it's a bear flag, so sell off and a bear flag. So the bears do have a credible case, but if the bulls get one decent breakout bar, I think it makes it clearly always in bullish. Bulls trying to get that here. Bears want a wedge lower high, 3 pushes up, 10 or 12 for the first push, and then second push and third push. And the bulls want a gap and a measured move up here. So important bar. Will it close on the high, which would help the bulls, or will it reverse and help the bears? You can sense that there's something wrong with the rally. Something wrong with the rally simply means not clearly a bull trend. It could simply continue as a trading range. It does not necessarily mean a wedge bear flag and a resumption down. But you can see that I've been justified by being hesitant to say always in long. All right, for the bears, it's the opposite of the bulls. All right, bulls buying above 20, bears selling below 23. It's still a stop order in a tight range. I am currently flat. Only one tick bear body, 23, so a lot of bears will not sell. A lot of bulls will see 23 as a breakout above 20 and 23, 24 as a pullback from that breakout. Remember I said that we could just channel up for hours. The channel will constantly look like it's about to reverse down, yet bulls keep buying below every bar, and they are scalping. Every time it goes above something and goes up a point or so, they take profits. Bad environment for stop entry, selling below 16, selling below 18, buying above 16, buying above 20, buying above 22. All of those stop entries were losers. Best choice, either swinging a short, stop above maybe 23, or swinging a long, stop below 13, or waiting, which is probably the best choice. This is bar 24, the end of the second hour, and you can see we're still on the 60-minute chart in a tight trading range, even though we're getting, it looks like we'll probably get a bull bar, not a good stop entry buy signal bar. It's still a bull flag, a rally, and then pullback, but tight trading range. Everyone wants it to be something it is not. Everyone wants it to be the start of a strong trend, but it's too early to conclude that. If we do get a trend, it's probably not going to be all that strong. Right now we are trending up, but for the bears we're getting lower highs and lower lows, and we're still trending down as well. Good looking bar, 60-minute chart, bad looking context. Bulls again trying for a breakout and measured move up. They tried to get it here, but didn't get a strong breakout. They're trying again here. Probably always in long at this point, with one bear bar in the past 7 bars, but not strongly bullish. 60-minute chart trying to trigger the buy by going above the high of the last hour right here, but not a very good looking buy setup. A tight trading range and a big bear bar. Potential for a breakout. The market has been deciding on the direction of the initial swing, and if it concludes that it's going to be up, we could get a breakout here. So far the rally is weak, and that increases the chances that the bulls will need a double bottom, a test down to the 20 low at some point in the next hour or so. Then you'd have a double bottom, higher low. Here, is this a major trend reversal? We have a wedge, 1, 2, 3, only about 4 bars up and 3 or 4 bars down. Typically too small, not enough bars for a major reversal. But when you get a minor reversal occurring in the first hour or two, a lot of times it can result in a major reversal. So even though the pattern is small, it can result in a trend. Right now, it looks like a minor reversal, and it looks like we'll probably have to test the 20 low if it's going to be a bull trend day. But because it's an opening reversal, sometimes you get a small, just a few bars, yet it leads to a swing up. So it's still possible that 20 ends up as a higher or low major trend reversal. If the bulls buy on a stop here, 60-minute buy stop, on the 60-minute chart, it's below the 60-minute bar, which is down here. 5-minute chart, maybe a couple ticks below 20. Bears made money selling above 12, selling above 15, selling above 17, right? And that makes a lot of bulls hesitant to buy because they know there'll be bears selling that 23 high. A lot of bulls would rather buy the double bottom if we get it. So come down and then reverse up a second time. That would be a higher probability buy. Without a strong breakout, the bears still have an argument for a wedge bear flag. So bear trend, pullback, wedge bear flag. Not good sell signal bar, 26, probably always in long, but obviously not strongly bullish. Channeling up, bears keep buying every reversal, every attempt at bear trend resumption. So low probability sell, even though a wedge bear flag, wedge lower high, double top 7, but not a great looking buy either because of the inability of the bulls to get a convincing breakout. Traders believe that this is more likely a bull leg in a trading range. They are therefore hesitant to be buying too high. I think we're probably going to test down to the 20 low. I don't know if we do it here or if we go a little higher and then do it. You can see the little bounce at the 26 low. Traders are buying below the low of the prior bar, betting that the channel will continue. Also, it's been a profitable strategy, buying the 12 low, the 16 low, the 22 low. You can see, because the bulls are failing to get their breakout, a lot of bulls are refusing to buy. They want to buy lower instead of buying at the high, as they would in a strong bull trend. Too many bulls do not want to buy high. The bulls are not doing enough to convince traders that it's safe and profitable to buy high. So a lot of bulls are looking to buy lower, maybe a double bottom 20. And for the bears, not a very good looking sell. It's a wedge bear flag. It's a double top bear flag, but a lot of overlapping bars, the lack of consecutive big bear bars, prominent tails up and down, probably buyers around the 20 low. In the buy zone around the 20 low, bulls need a decent bull bar. I said at the open that I thought today would not be a strong trend day up or down. And I still think that's true. The location is good for the bears. Daily chart, we're fairly high up. And this is strong enough to get a second leg down. Again, compare this to this. Bear breakout and just a series of bull bars, 7 or 8 bull bars. Bear breakout, only 2 bull bars so far. We could still get another bull bar. We could still rally by the end of the day, but the context is different. I think this is a wedge bull channel, and the weekly chart is so extremely overbought that I think the odds are we're going to go lower. 5-minute chart, different story. We could get a double bottom here. Let's say we get 2 ticks below 20. What does that do to the double bottom? Well, I think it eliminates the double bottom. And then instead of a double bottom 20, you'd be thinking about a double bottom 13. I think not many traders want to sell here either, right? They want to sell high, a trading range environment, and they want to buy low, and we're in the buy zone. But a lot of the bulls will wait to see if we get a double bottom. Limit order bulls buying 24 probably will make money. Limit order traders have been making money all day from the very first bar. Consecutive bear bars, probably back to always in short, but still we're in a support zone. The bottom of yesterday's range, we reversed up repeatedly at this price level, and then today we reversed up in this general area as well several times. Not likely to be a big bear trend day. Not likely to be any kind of a trend day. It's more likely that it's going to be mostly a trading range day. I think probably always in short. Bulls are hoping to get the double bottom 20, but they should not have allowed 28, 29 consecutive bear bars closing near their lows. So that increases the chances we're going lower. Just like bulls did not want to buy above bars, bears are hesitant to sell below bars. We have a trading range environment, and traders are looking to sell rallies, not breakouts. Just like up here, bulls were not buying the breakouts. They wanted to buy pullbacks, buying below bars. Double bottom, higher low, major trend reversal. But because 30 is not a good looking bull bar, a lot of bulls are hesitant. For the bears, their stop is above 28 or 27, and they'll sell this high, but bottom of a 15 bar trading range, not really a good location to sell. So the bulls are in a good location, but do not have a good buy setup, and the bears have good momentum, but a bad location. Best choice, wait. For the bears, it's a pullback from the 28-29 breakout of a wedge bull flag, but we're right at the bottom of a trading range, and the bulls, double bottom, higher low, major trend reversal, but bad buy signal bar 30, and so far bad entry bar 31. I would be more willing to sell the 30 high if we were not exactly at the 20 low. So you'd be selling 3 ticks above a significant support level. What about, is 31 a good enough buy signal bar for the double bottom, higher low, major trend reversal? I don't know. I wanted a good looking 30, and 31 is a bigger bar, so the stop is further away, the risk is greater, and it's forcing you to buy above a bar with a fairly prominent tail relative to the size of the body. So not a great looking buy. And for the bears, they could not break below the 20 prior low, so that keeps the possibility of a double bottom, higher low, major trend reversal open. So not a good sell, not a good buy. a lot of times when you get a test down to a potential higher low major trend reversal, the sell-off is sharp, and then you still get the reversal. Here, bear breakout and follow through, yet we still got the reversal up. Strong pair of bear bars, yet still a higher low and a reversal up. This day has a lot more energy, much less overlap, right? So much more potential for a trend. Again, sharp sell-off, but double bottom. A decent buy signal bar here, right? Unlike today. Sharp sell-off, tried to get a double bottom, tried again. Another sharp sell-off. Finally got the double bottom, second entry, one, or at least a micro double bottom, and then a second entry here, one and then two. Tried to become a higher low, but failed. Bull bar closing on its high. That's better for the bulls. Okay, swing buy, but when we have so many reversals and so much overlap, the probability of a swing is not very good. Bulls want the double bottom, higher low major trend reversal. Bears want the head and shoulders top bear flag, left shoulder, head, right shoulder. Bulls getting a decent bull bar here. Stop order bulls 30 can make money. That's good for the bulls. Remember, the last hour 60-minute bar was a decent buy signal bar. So that gives the bulls a chance. But when you look at the 60-minute chart and all the sideways bars, the likelihood that we're going to get a big rally from here is small. What happens if it ends up like bar 23? 23 was a breakout attempt, and at one point it was a big bull bar on its high, but by the time it closed, it was a bear bar. Possible here as well. Now, some bears sold 30 high. I think it's a reasonable sell, although I would not do it bottom of a trading range. And because it's reasonable, the odds are we'll get back there, but the bulls can trap them with a decent bull bar here. Bulls need to do more. We reversed 28.29, probably back to always in long, but I think most bulls will scalp and they want to buy low, they don't want to buy high. And as far as buying the 60-minute breakout above here, I think traders are not going to be buying with stops. They'll wait to see a strong breakout and then buy the strong breakout. The dominant feature of the day is the reversal up. Second entry reversal, 10 and 14. We have the sell-off, but we reverse up twice strongly. So to me, I think we're going to work higher, but this is probably not going to be a strong reversal day. Some reversal days are, slightly up, but not strongly up, and this looks like one of those days where we're not going to get a strong reversal. These reversals are pretty strongly up. Same with these, not much overlap, not a lot of tight trading range, multiple reversals. I'm trying to see if I have a weak reversal day. This is kind of like today. Reversal and not strongly up, mostly sideways. For the bears, head and shoulders, top bear flag, but now we have 6 bars without a bear body. So probably always in long, probably buyers below, but probably not strongly up. We're trying to get above that 60-minute high from the last hour, which is right here. And the bulls are hoping for a strong rally from there, but probably not. Remember, just like the bulls have a double bottom, higher low major trend reversal, the bears have a double top, lower high major trend reversal, bull trend, bear breakout, and then double top, lower high. So the market's still deciding on direction. Whenever it's not clear, I always go to the left and find the last time that it was clear, which was here. And I assume it's slightly more likely to get trend resumption up than trend reversal down. For the bears, we have head and shoulders top, major trend, head and shoulders top bear flag, but I still think it's more likely that we've seen the low of the day. We may have also seen the high of the day. Yesterday, 18 bars, the market never went above the high of the first 18 bars or below the low of the first 18 bars, and today might be similar. Still slightly more bullish than bearish, but traders are hesitant to buy too high because we've been sideways for 20 bars and it's better to buy low. And for the bears, they'd rather be selling with limit orders above bars, above 34. I don't know, that's not high enough up, maybe above 26. You can see the bulls have bought 26 low and scaled in lower, made money. The bulls buying the 36 low, I think we'll make money. I think we're going to get above the 26 high. I think we're always in long, so I think it's slightly more bullish than bearish, but, not very bullish at all. What happens if we break below 30? Well, probably buyers below. Buyers below 10, buyers below 4, buyers below 24, probably buyers below the double bottom. In general, if you break below an obvious stop area, 50-50 chance the market will reverse up, 50-50 chance you'll get a breakout and measured move down. And I adjust the probabilities depending on what's going on. We're in a limit order market, lots of reversals. The probability of a failed breakout is higher than the probability of a successful breakout. So if we run the stop on the bulls below 20, more likely the bear breakout will fail. So probably 60% chance there are buyers somewhere down here, and only 40% chance the bears will get a swing down. You can see the 60-minute moving average, which is just working higher and higher and higher. So the support is going up, getting closer to the current price, and that means if we do get a sell-off, the sell-off will not likely get very far because the 60-minute moving average is getting pretty close to where we are. Bears might sell a tick below 26, betting that we'll get a pullback. I'm currently flat, but I'm slightly more bullish than bearish because the dominant feature is the repeated reversals here, especially 14, and then we have the double bottom, higher low major trend reversal. Sometimes you'll get a deep pullback and then you get a double bottom pullback with a slightly higher low. If you get that, that would be a decent buy, especially if we got a good buy signal bar with it. And for the bears, a double top, lower high major trend reversal, bull trend, bear breakout lasting forever. And then we get another breakout here, and then a double top, lower high. But I think the probability is slightly better because of this. When you get a dominant feature like that, it usually lasts for hours, usually the whole day, but sometimes, 3 or 4 hours. So the bears have to do a lot to take control away from that. Stop for the bulls above the double bottom. Their premise of a major reversal is valid as long as they maintain that double bottom. If it breaks below the double bottom, as I said, probably buyers below and a reversal up. If the bulls get stopped out, they'll buy again on the reversal up. The bears, they need a series of big bear bars or a strong break below the low of the day, and the odds are against it. Well, the bears double top and small wedge up 31, then up 36 and up 40. But I think if we sell off, we'll get a higher low. So it'll be a double bottom, higher low. I still think we're always in long. It looks like a lot of traders want to buy lower, maybe slightly above the double bottom, maybe a test of last week's, the low of 2 weeks ago. Again, that green line. And for the bears, you can take the swing short, but I think we're always in long, and I think it's more likely there'll be buyers somewhere below. Maybe the low of 2 weeks ago, maybe just above the double bottom. Everything is small, so it makes it hard to make money with a stop selling below 41. The support level is 5 ticks below the low of 2 weeks ago. Bulls, I think what they need is a higher low with a decent buy signal bar. You can see the 41 close and 42 high. So as soon as 41 closed, a lot of traders just sold the market. And you can see 42 did not overlap the 41 close. That, to me, is a sign that a lot of traders, as soon as they saw the bear close, they just hit sell the market. They still probably got filled 1 tick below 41 because they're probably not going to get filled on the high of 42. We're in the buy zone, but we're falling with pretty good momentum. I said if we fall below the double bottom, it looks like we will, but if we fall below the double bottom, in general, 50-50 chance that the bear breakout will fail. I said earlier that better than 50-50 chance it'll fail, but this is falling with enough momentum so that it's probably more like 50-50. What happens below the low of the day? Well, they've been buying below lows and selling above highs all day, so probably will buy below the low of the day, especially since it's right near the 60-minute moving average. So something just happened, some report, some announcement. A lot of times you get bond announcements at 10 o'clock. Let me just check. I don't see anything, but a lot of times you get announcements at 10 o'clock. Bulls, they'll buy the 30 low, 1 point lower, 2 points lower. A lot of bears do not want to be selling on the bear breakout. So a lot of the bears, they sold up here, and they'll probably scalp out with a couple points. 60-minute chart, tight range, big tails below bars, not a good sell signal bar the last hour, and right above the daily moving average. Big enough bear bar, the bulls probably will need at least a micro double bottom. We're in an area where they bought many times earlier today, but we're falling with a lot of momentum. When it's falling like that, and I'm looking to buy, if I'm buying with limit orders, I'm not buying the 30 low, I'll buy 1 point lower or 2 points lower, not at the 30 low. And for the bears, strong enough breakout, the bulls probably need a micro double bottom, and therefore the bears are willing to sell a bounce, like a 1 point bounce or a 2 point bounce. You can see the hesitation. You got the limit order bulls, and the bears are trying hard to trap them. But a lot of bears do not want to sell too low, and that makes it hard for the bears to trap the bulls who bought either 30 or 1 point lower. Chances are the bulls will make money. I don't know if they'll make money in the next bar or two, but chances are they'll make money, and chances are this will not be the start of a big bear trend. You know, look at the past 100 bars. One minute chart. This is the breakout point, and when it started breaking out, some bears placed limit orders to sell at that low or a tick lower, and most of them probably did not get filled, and they're looking for a 1 point scalp. Similar to 30, strong sell-off, and then a possible reversal. 43 is a big enough breakout to make me hesitate to buy on a stop above 44. So when we get a surprise bar like 43, I usually wait for a micro double bottom, some kind of a second entry buy. Limit order bulls, 1 point below 30. They need one more tick. Looks like they will get it. If they do, especially if they do right away like this, that reduces the chances of a bear trend. And the odds of a bear trend are not high anyway. The odds of a bull trend are not high. The odds are it's going to remain a trading range day, and we're low in the range. But when you get a strong leg down, a lot of the bulls wait for a micro double bottom and take a second entry buy. Now, sell the closed bears. 43, what are they thinking? They're thinking, darn, I sold at the bottom of a trading range today. And that's exactly what they're thinking. And they're thinking, oh my gosh, the limit order bulls who bought a point below 30 made money, and here I am short, and now we have a big bull bar. So those 43 bears are trapped. However, I think if they sell more, a point or two higher, they'll probably be able to avoid a loss. I think the sell-off is strong enough, so it will probably get some kind of a test back down. It never looks like it's going to reverse. Just like on the rally, it didn't look like it was going to do this. I did not expect it. I thought the odds were we'd get a pullback, but I thought it'd be a higher low. But now the bears, they have a strong breakout, 43, and it never looks like it can fail, but it almost always does. That's just the nature of trading range days. You just look to the left and say, it's a trading range. And then you see a big bear breakout 43, and you think, maybe it's going to become a bull trend day, or a bear trend day. And then you sit back and say, wait a minute, most breakouts fail, no matter how strong they look, and therefore 43 is probably going to fail, so I don't want to be selling too low. Should be sellers. This was support, should be resistance. It's around a 50% pullback, and the bulls will probably want a micro double bottom. So even though it's a good looking bull bar, and it's a type of wedge, you have a double bottom and a breakout below the double bottom, and it's failing. So 3 pushes down, 1, 2, 3. So it functions like a wedge or an expanding triangle. But this is too strong, and I think it's better to wait for a second entry by probably sellers, a point above 43 close, a point above, who knows, 30 low, right? 50% pullback around the low of 2 weeks ago. I can't even get the text near the line because all the bars are straddling the line. For the bears, 45, a pullback from the bear breakout, but I think too low to sell with the stop down here. A lot of times when the market's doing that, if I'm watching closely, I'll just put up a 1 minute chart, and if I start to see 3 or 4 bear bars closing on the lows, I just hit sell the market. And I missed it today, and but I typically do that when I start seeing close on low, close on low, close on low, bigger body. Traders are obviously selling the market. Look at the high of this 1 minute bar and the open of the bar compared to the close of this bar. Everybody's just selling the market. Same here. Open of this bar below that close. Traders selling the market, but scalping. Traders are waiting to see, is it going to close on its high, which means we might just reverse straight up, or will it have a 2 or 3 tick tail on the top, which means we may go sideways here a little bit. I doubt that we're going to go straight up. I think we're going to have to go sideways, especially since it's between 10 and 11 o'clock when the market often does confusing things. It tends to lack conviction, and it tries to do something and fails, and tries to do the opposite and fails, and end up getting like a low 2 bear flag. Did you notice how with 1 second to go, it had a 2 tick tail? And when it closed at a 1 tick tail, the computers wanted it to look a little bit more bullish. So they waited until the final second and they shrunk the tail to 1 tick. I think the computers try to generate confusion because they want to make traders take bad trades and make other computers take bad trades. They're trying to fool other computers, and they know if they close 45 near the high like that, a lot of computers will see it as bullish, but I still see it as probably going to be sellers somewhere up here. We'll get a second leg sideways to down. Suppose we get a third bull bar closing on its high and closing above the moving average. Then we'll probably not get back down to the 43 close. Right now, I think we'll get down to the 43 close or to within a tick of it. The third bar is always important on a reversal, and the more bullish it is, the more likely the market will go up. Since this is a trading range day, and the bears and the bulls need one more bar, the assumption, you have to assume they're going to be disappointed by 46, and that 46 will therefore generate confusion, and confusion means traders will probably sell higher and buy lower. The top of the sell climax bar, 43, we'll probably get there. I don't know if we get there right now or if we test down, but I still think, well, we're going to wait until this bar closes, but my guess is it's going to disappoint the bulls. 5 ticks below the 46 close, So you got sell the closed bears who scalped. You also have sell the closed bears 43 who sold more, 1 point higher, and they're trying to get down there. I sold the 46 close stop up here and I scalped. I was going to sell more higher, did not have to. I'm back to flat. Higher low, but not a good stop entry buy. The 43 bears right now are trapped, and that creates the potential for a big bull trend bar here. You know, they're hoping to get out, break even. They sell the 43 close, they sell more higher. Right now, they were able to get out, break even. If they sold the 43 close and sold more 1 point higher, they get filled right here, and their break even is here, and it fell 1 tick below. So they were able to avoid a loss. Some of them might still be holding, but they will give up if it starts to go up, and that creates the potential for a bull trend bar here, a big bull reversal bar. So down big and then up big. The bulls failed to get that big breakout on 49, and therefore the bears are hopeful this is a low 2, and they'll be able to get out at the 43 close. I personally would not take that short. You know, we only have one bear bar in the past 5 bars. And then 49 it's a fairly decent sized bar with a bull body. So I would wait right here. It's a low 2 short. And a lot of times if you have a trend day you have a trading range day and you get a low 2 at the bottom of the range, you'll break into a big trend. But when that happens, it usually happens before 10:30. Low 2s early in the day. This is similar to today, trading range and a low 2, and the bears get a breakout and a measure move down, but this is a little bit earlier. This is like 9:30, and we're already 10:30, 10:40, but this is what the bears want. They want the low 2 and then a trending trading range day, upper range, breakout, lower range. This is an attempt at a low 2 in a trading range, but it's after a bull trend. So for the bulls, they got a double bottom bull flag. The low 2 triggered, but went to the upside. This is not a very good looking low 2. We have a bull trend and a trading range, and we're at the bottom of that range. Chances are, we're going to reverse up. Low 2 after a sell-off. Of all these things, this is the most similar to today. A low 2 at the bottom of a trading range, but today we're way over here. It's too late, and that makes it unlikely that we're going to get a swing down. I still think the dominant feature is this, especially following that. So I still think the odds are the low will hold. You can see the bears made a good attempt to break below the low, but the bulls bought it. The bears want their low 2 and a trend down. They want to get below the low of the day, but probably buyers below. It's a trading range day. And bulls don't care if the bears trigger the low 2 as long as it reverses up. Bulls not getting their breakout, 49 and 51. That increases the chances that we're going to get down to the 43 close. What happens if we break below the low of the day? Well, it's a trading range day, probably buyers below, especially since we're at the 60-minute moving average. It's possible that we might get leg 1, leg 2. So leg 1 and then leg 2 takes us down there. Then we also have a double top, lower high for the bears. Here's a double top. Here's the neckline, just below the low of the day. It's a tempting, excuse me, it's a tempting sell, but I'm going to wait. I don't like to sell too low in a trading range day because most breakouts fail. Will the bears buy back their shorts? They have a double bottom attempt. Let's say we get a double bottom here. That would be twice the bears tried to hold on and get out break even 45. And if 52 is a decent bull bar, I think the bears will give up. They've had 2 attempts to get down to their break even level. And if they fail twice, especially if there's a good bull bar 52, I think the bears will buy back their shorts and the bulls will buy. On the other hand, if it continues confusing, like a 1-tick bear body or a 1-tick bull body, it's probably better to wait. If it looks like that when it closes, I think the bears will get out and bulls might buy. Failed low 2, bottom half of a trading range day, and they know the bears will give up. The 43 by the sell the closed bears will give up. You can see in the final seconds they made it just a little bit bigger, increasing the risk for the bulls. If I were a bear, had I shorted, I would give up. And for the bulls, I had my finger on the button to buy, but I ended up not buying because it grew 1 tick more than I wanted it to. So right now I'm trapped out. A low 3 and a tight range, you can call it a triangle, but I think it's too late for the bears. I think we're always in long. Because 52 is a big bar forcing traders to buy at the top of the range, 50% chance it's going to pull back 50% of the way, which it did. I still think it's a buy. And for the bears selling below 53 for a triangle, I would not do it. I did not take the buy above 52, but I think the odds are slightly better for the bulls. This low is important. The sell the closed bears tried to get out, could not. Tried to get out, could not. Why is this low higher? A lot of these sell the closed bears have raised their limit order to get out. They're now willing to take a 2 or 3 tick loss, and that's why we have the higher low. You have bears trying to get out, could not, and now deciding maybe they'll raise their limit order and accept a bigger loss. So if we get a good bull bar 54, it's a reasonable buy for a test back up to the double top. Without a good buy signal bar 54, then that tells me that the bears are still trying to get out, or they're still holding on to their shorts, or they're still adding to their shorts. Okay, not a very good bull bar. But I still think a lot of bears will get out above 54. Still think always in long, and the bears will give up here. Bulls reversing 43, but not a strong reversal. Remember, we were in breakout mode. We had a double top and a double bottom. We broke below the double bottom and reversed up. So what's going to happen if we get above the double top? Well, odds are we're not going to go up all that far. Most of the bulls who bought are scalping, and most of the bulls, I think, would buy with limit orders. Limit order bears on 49 probably will make money. Limit order traders have been making money all day. The sell the closed bears 43 are finally giving up, but not a lot of buying, right? Not a lot of aggressive buying. They had a lot of time to get out. Six ticks up, so a lot of the stop order bulls scalped. Can you sell up here? 6 ticks above, betting the bulls will take profits. And that we'll get a double top, lower high. We have a double top, lower high. We're in the sell zone. The market has been selling off from this general price all day, but I think we're always in long, and we have a breakout. And even though it's a weak breakout, the odds still favor that the reversal will be a pullback, and we'll get a small second leg up. For the bears, they see it as 2 legs up, 1, and then a triangle pullback, and then 2, and a double top and a pullback from this breakout below this double top bear flag. So double top neckline breakout, and then a 2-legged pullback, 1, and then triangle, and then 2. Still slightly more bullish than bearish. What happens if we fall below 13 before the end of the day? If that is the big event, the dominant feature of the day, what happens if we fall below it? It's a trading range day, probably buyers below. Right now I think we've seen both the high and low of the day. That today will be like yesterday. Early low of the day, early high of the day, and never broke out of that opening range. Can you buy on a stop up here? You can see the 60-minute chart, a micro double bottom, a ledge, 4 highs at the same price. I think it's more of a limit order market. I think the dominant feature of the day is the reversal up at 14. We should get up to the 7 high, but I think it's better to be buying with limit orders below bars. I think the bears who sell here will make money. Maybe they'll have to put a stop above the high of the day. So I'm not eager to buy here. We have a gap so far, 61 low, 57 high. Might get a measured move up, but it's been a limit order day. So you have to be very quick to make decisions if you're buying with stop orders at the top or selling with stop orders at the bottom. Because in general, the stop order trades are going to lose money. You can see the 58 bulls took profits. They scalped for 1 point. Limit order day, scalping day, trading range day. For the bears, they have a wedge, 3 pushes up, 52, 56, but a pretty tight channel, even though it's a failed breakout of a double top. I still am not going to sell with a stop below 61. The bulls expected a second leg up from the 55, 56 breakout, and they have it. And I don't know if they get a third leg up. There's just not much energy. Most of the bulls have scalped out. We still have a potential gap, 61 low, 57 high. That takes us up to the high of the day, but we're not getting much energy here. So a lot of the bulls have scalped out and are flat. To me, that's more of a sell up there above 61 than a buy, but fairly tight bull channel. So I don't know how far down we go. For the stop entry bears below 62, I would not take the stop entry short. The pullbacks over the past 10 bars have only been a couple of ticks. And for you to sell with a stop below 61 or 62, you're betting on a 6-tick pullback. Magnet at the 7 high, which is yesterday's high. We fell below it, we tested it. Looks like we're trying to test it again. And we have the potential for a measured move up. Open of the day today is important because if we close below it, then we have a bear body. If we close above it, then we have a bull body. And then you have to be thinking that maybe we are doing this, getting a series of bull bars after a big bear breakout below the moving average. Big bear breakout below the moving average. Bulls trying to get a series of bull bars. I still think this is going to result in a lower high. Even if it gets to a higher high, I think there'll be sellers above. If it's a tight channel, where do the bulls buy again? It's a small version of big up, big down. So a lot of the bulls will wait for some kind of a double bottom, maybe 64, 66. And for the bears, it's more of a limit order sell at these highs and not a stop order sell at those lows. The big magnet for the past 2 days has been the low of 2 weeks ago, that green line. Weekly chart last week triggered a buy and then triggered a sell by going below the low of the week before. And you can see we've been testing that low. The bulls would like this week to close above the low because its low is the signal bar low where the bears shorted, and the bulls want to weaken the sell setup, and the bears want this week to close below last week's low. They would like it to close below, they would like it to close below this low from 2 weeks ago, and they would like it to close below this week as well, although right now that does not look likely. "15-minute chart, you can see a higher low, decent breakout, not a high probability short. Failed breakout of a double top, more likely a pullback from this breakout than a reversal. 5-minute chart, tight channel, usually means it's a breakout on a higher time frame, and it is. And that means it's probably a minor reversal that will lead to a bull flag over the next several bars. Bulls trying to get up to the open of the day to create a bull bar, even though we have overlap 64 low, 57 high. The bulls have a reasonable chance to get to the open. Will we close much above? No, it looks like the open of the day and yesterday's high will be the target area. And at the end of the day, the market will decide whether to close above the open or below the open, but we'll probably close somewhere near the high of the day. It's by the close here, but this is starting too early, and therefore probably will not make it to the end of the day. We'll probably get at least a few bar reversal at some point between now and the close. Limit order bears selling 1 point above 60. I don't know if they'll make money. They probably will. It's a limit order day, and traders have been making money, even selling above 40, right? So they'll probably make money here. Strong enough breakout. The bull body's getting bigger. You can argue wedge, but the bears will probably need a micro double top. If 70 closes on its low, I think a lot of the bulls will get out, even though I still think we're probably going to get up closer to the open of the day. Now, it's always possible that this could go up all the way to the end of the day and become a very strong bull trend, but the chance of that is probably 30%. So 60% chance or 70% chance the bulls will have a hard time getting much above the open of the day. And the best they're trying to get is just 1 tick above the open of the day. They want the daily chart to have another bull body. Probably buyers below. We're close enough to the open. I think we'll probably get there. Limit order bears selling 62 high, selling more 1 point higher, trying to make a profit, but I still think probably more likely buyers below. High 1 buy. This is a climax, 69. Might get a couple small pullback, make it a high 2 buy. I think we're always long. I still think we're going to get closer to the open. But if the bears start to get a series of bear bars, I will change my mind. But right now, I still think more likely buyers below. There are 2 things against the buyers below. One is it's a third push up, so it's a wedge. And then limit order bears have been making money all day. So chances are the bears who sold 1 point above 62 will make money. You can see this is actually pretty interesting. I bought one tick below 70 instead of at the 70 low, thinking that we may pull back 2 ticks to the 62 high. And it looks like a lot of traders bought the 70 low, and there are a whole bunch of limit orders to take profits exactly 4 ticks above. Okay, they just got out. And open of the day, I think, is the obvious magnet. It's getting too late in the day for me to sell up here at 70. So I probably will not take any more trades. Now, I still have this target drawn here, but I think this pullback is so far below here that this is no longer a measuring gap. And we don't have enough time to reach a measured move up from there or from here. But we might be getting a measured move based upon, remember I said the dominant feature of the day was this reversal. So, that's a potential target. I usually think of the first target as the open of the first bar of the breakout to the close of the final bar, and we're already beyond that. Then we have a double top, and we broke above it. We broke below it first, but we broke above it, and that's right around the open of the day. So in terms of measured move targets, I think it's really more the open of the day that's the real target. You can see the daily chart. The bulls want to get another bull body. They want this rally to be like this rally. Big bear bar closing below the moving average. Big bear bar closing below the moving average. And then the bulls got 7 consecutive bull bars. And the bulls are hoping to do that again so that traders will assume we'll go higher. Right now, I think we will not go higher. I think we'll get a lower high. But, the bulls are trying to make me change my mind. We got to within 2 ticks of the open, and the market usually likes to either reach the target or get to within 1 tick. So we're probably going at least a little higher. This was by the close, but now it's not. We pulled back, and so it's just simply a bull channel at this point. So it's not as climactic. These pullbacks relieve the exhaustion element, and they can allow a trend to go further. We had that the other day in that sell climax at the end of the day here. These tails, it looks to me like that was the reason why we're able to go lower. It relieved the climactic sell. Even though the sell climax started early, it still made it very close to the end of the day, in part because the exhaustion element, exhausted bears got a chance to rest here, and then they got one more push down. And exhausted bulls got a chance to rest over here, and they got one more push up. Most of the bulls, I think, will scalp out. You have stop order bulls, 73. I would not enter on a stop here. I mean, I would do the limit order only or wait. Stop order bears below 76, I would not do it. You can see a lot of traders are afraid that it's not going to make the open of the day, and if it's not going to make the open of the day, maybe it has to go down to support. You still have the scale-in bears who sold this double top and sold this high, and they're selling, trying to get back down there. But it's going to do it without me. I think these 2 bars are very important. Sometimes you get something that looks pretty small. In the 5-minute chart, these bars are basically invisible. They don't stand out, right? They don't stand out at all. But they're doing something, I think, that's important. What they're doing is making it unlikely that today will close above the open of the day. That means they are making it likely that today will have a bear body and that this reversal up will not do what this one did. And what they're doing is they're keeping the probability in favor of the bears. So right now, I think it's more likely that we come down and test this close than it is that we test above the all-time high. And if we do come down here, then I think the odds increase even further that we've begun the correction down to these lows down here over the next 2 or 3 months. So it's interesting that two little, pretty unremarkable bars on the 5-minute chart can, I think, affect the probabilities on the daily and weekly chart. So why are we selling off? Because the bulls wanted to get above the open of the day, and once they decided that they could not do it, the bulls are selling, and once the bears realized that the bulls were going to give up, the bears are selling as well. This is bar 78. Right now it has about 22,000 contracts with 90 seconds to go. And it always, not always, but it's usually the biggest volume bar of the day, even if it has a small range. So right now 22,000 contracts, and time-wise it's 70% done. But the final 30% will probably double or triple the volume to 50 or 70,000 contracts. So that means we'll probably get 30, 40,000 contracts in the next minute or so. Okay, 1 minute to go. The volume is 25,000, 26,000 contracts or so. And it'll probably end up with over 50,000 contracts. The time in sales, it's impossible to watch. The numbers fly by so fast, you won't even see the ones where, with 1,000 contracts, they'll just zip by really, really fast. I don't know if I can change the font. I'm just trying to show more prices on the screen. But anyway, I did not see any 1,000 contract trades take place. And what do we end up with? Okay, 67,000 contracts. So that means we get about 40,000 contracts in the final minute. And of that 40,000, probably 20,000 came in the final 10 seconds or so, which is usually the case. It's when the stock market closes and final hedging, the institutions do their final hedging there, the final minute, final seconds of the chart. Weekly chart, bulls hoping for a bull IOI, which is a bull flag, and then another leg up, about 39 weeks above the moving average. You already know that I think it's the most extreme buy climax in the 18-year history of the E-mini, and therefore I think it's not likely to continue. Daily chart, we have that really strong bear breakout, and it looks like we're probably going to get a bear body on the day. That means it's different from this rally. Bear bar closing below the moving average and then reversal up in 7 consecutive bull bars. We have bear bar below the moving average, slightly bigger than this, slightly better context because it's later in a bull channel. And now we have 2 bull bars and a bear bar, and one of the bull bars was a doji. This had a big tail but a bigger body than this, and now we have a bear bar instead of a bull bar. Therefore, this reversal is weaker than this one, and I still think the odds are this is forming a lower high, and that this is probably the start of a swing down. It's not 60%, but it's like 55% that we're going down here before we go up here. And if we get down here, especially if we get below there, then I think it starts to go up to 60% that we've begun the correction down here. It's really fascinating to me that 2 little bars can be meaningful because they determine the appearance of this bar on the daily chart, these two bars, right? If we had one more bull bar, this would be a bull bar on the daily chart. Instead, we get these two bear bars, and we got a decent bear body. So these two bars affect the whole day is very quiet, and these two bars look like these bars or these bars or these bars or these bars. They don't look any different from any of the others, but they're more important because they did this. They turned a green bar into a red bar on the daily chart. Really quiet limit order day today. On days like this, I never take as many limit order trades as I would like. Maybe 30 years ago, 20 years ago, I might have done it. But today, on a day like this, I see a lot of them, and by the time, I decide, am I going to take it, or do I try to buy lower, or do I try to sell higher? And by the time I decide, it's too high to buy or too low to sell. So, on a day like this, there are probably, 30 reasonable limit order trades, for 1 point scalps or more. Some of them were bigger, but, probably at least 30 1 point scalps today. We were in a tight range yesterday. We tried to break below the bottom. We tried to break above the top. And then on the open, we tried to break above the top. It failed. We tried to break below the bottom. It failed. We tested again below the bottom of the range and reversed up a second time. First bar of the day, a doji bar, failed breakout above a 5-hour tight trading range. It's telling us that it's continuing the tight trading range price action. Instead of a big bull bar up or down, we got a doji bar, a trading range bar, and we're right above the top of a 5-hour range. And then bar 2, same thing. And therefore, the odds were we had a limit order market. I said I would not buy the one low, but I would buy 1 point lower or at yesterday's close or at the moving average, as long as at least 1 point lower, because I thought the odds were we would go back above the one low. And then bar 4, trying to get an opening reversal up from the close of yesterday, the moving average. But the 4 bear bars, 2 of them good, probably sellers above, and we'll probably get a lower high. Maybe we'll test yesterday's high. We tested yesterday's high 7 and reversed down a second time, this time with a pretty good bear bar. Possible high of the day. Second failed attempt to break above yesterday's high. 8, pretty good bear bar, probably going lower. 10, you can argue it's a failed breakout below the range, 65 from yesterday. It's also 3 reversal attempts up. We went down and up on 1, and then down and up here, and then down and up here. Reasonable buy, but because of the 3 big bear bars, the probability is not as good. So either traders wait for a second entry buy, like above 13 or 14, or they get stopped out below 13 and then get stopped out below 11 or 10 and buy a second entry above 14, or they buy above 14 and buy more below 10. They buy above 10 and buy more below 10, betting that the follow through on the way down has been bad, and it probably is bad here. We have an expanding triangle, 1, 2, 3, 4, 5, and also 1, 2, 3, 4, 5. Probably will keep reversing. And then I thought 14 was pretty dramatic, a big outside up bar, and third big bull bar here. I thought 10 was a reasonable buy, so I think buying lower made sense. We should get back to the 10 low. And then we get that big bull bar on 14. I thought that was going to convert the day into a reversal day. But as I said, rather than reversing into a big bull trend day, I thought it would be sideways to up with mostly trading range trading. And it was a limit order day all day. For the bears, 16, a pullback from the bear breakout, and a low 212, double top 7. But I still think this is the dominant feature, and therefore always, I don't know if it's always in long yet, but probably buyers below. Then we got 3 bull bars here, another reversal of 20. 20, it's a higher low, major trend reversal, but probably minor because not enough bars up, not enough bars down, so probably minor. But I thought the market went always in long, maybe above 20. 23 for the bears, a double top 5. It's a double top 17. It's a wedge with 12, 17, but a one tick bear doji, and I think probably always in long. We'll probably go up to the 7 high, maybe to the open of the day. 26, we have a wedge. I think a lot of the bulls will get out below 26. For the bears, I think it's not a great short. 30, we have a strong bear breakout, 28, 29, but a lot of the bulls will buy one tick above 20, betting on the double bottom. We have a doji buy signal bar 30, and then a better buy 31, but buying fairly high up. Makes me think if we go up, we'll probably test back down. I thought we were going to get a double bottom higher low. We got a double bottom lower low. We got a failed breakout below the double bottom. Up here, I thought 41 would pull back to the low of 2 weeks ago, the green line. I thought it would not fall below the double bottom, but I thought if it did, it would reverse up, which it did, 44. It took a few bars to undo the bearishness of these three bear bars. Not a good buy signal bar, 48. 52, okay, buy signal bar, but the top of a tight trading range. So if you take it, your stop is down here. And then 54, the sell to close bears, 43, gave up on 55, 56. And that was likely to be the start of a swing up. Still limit order day, so probably still sellers above everything. But once we started to go up, especially through here, I thought we would try to test the open of the week. We only got to within 2 ticks of it, and we reversed down. Traders were all day long. Let me do buy the close, sell the close. 3, is it sell the close? Probably. 4, sell the close, but we might get an opening reversal up. And then is it sell the close? 8, yes. What about 9? Yes. But then disappointment 10, and the bears had to work their way out of it. Is it sell the close? 29. I think the bears need to get below 20. They did not. Is it buy the close? 34. I think the bulls have to get above 26, and they did not. And then 43, I mentioned that. We held above the low of the day, and I thought better than a 50-50 chance the breakout below the double bottom would fail. And we had a decent buy signal bar. But when the channel down, the breakout is that strong, usually it does not go straight up. It's usually a minor reversal, and you have to go sideways and then get a second entry buy here. We got a third entry buy here. And by the close, 56, we're probably going up at least a little bit more. And then 68, probably by the close. 69, a bigger bar, testing yesterday's high where we reversed twice today. Not a great buy the close, but we're probably going higher. I'd rather buy with a limit order, either at the 70 low or 1 tick above the 62 high, which is 1 tick lower. And then I would not sell that close. And limit orders all day long, everything. Buying below 1, buying below 2, buying yesterday's close, buying the moving average, selling above 5, scaling in higher. Probably even buying below 7, certainly buying below 4, buying below 66, and then buying below these bars, 11, 12. Would I sell above 10? No, I thought it was a reasonable buy. And then buyers below bars here, below 16, below 22, probably below 26, and then below everything. Here, you're buying fairly high in a range before the breakout above the double top. I would rather buy lower down. I said when we were up here that I'd rather buy just above the double bottom. And then for the bears, for the bulls on the way down, they bought below everything. Below 16, below 24, below 30, and then below. Even with this failed breakout, they bought below. And then the bears sold above everything, and they made money all day long, selling above 5, selling above 13, selling above any of these bars, 15, 16, 17, 22, even 24. And then on the way down, selling above 29, stop above here, never got hit, selling above 35, above 38, and then here, selling above 46, selling above 49, all day long. The gaps closed. The only gap that stayed open was for the bears who sold above 62. They had to wait for one more push up, but they eventually were able to make money as well. And they probably sold more above 70, and they probably wanted to sell more at the open of the day. We never got there. So a lot of scalps. 3 minutes left. We're probably not going to get back to the open of the day, and therefore those two bear bars late in the day altered the probabilities on the daily chart. Even just two little bear bars, just falling a few points, but they're important. Try to keep your questions short, because it's hard. If they're long, they have many parts, and it's hard for me to keep everything straight, and it's very difficult for people listening to me read a long question with a lot of parts. Al, can you talk about trade management of a stop order, trades in a trading range day, especially a stop loss placement, since signal bars stops are often not reliable, like bar 10, bar 44? How do we structure a trade with the stop? Okay, and and also I cannot scale in. Okay, that last few words, those last few words are important. If you cannot scale in and you get a good signal bar like 10, I don't take the first entry. I either wait for a very strong breakout and then buy a close and use a wide stop, or I wait for a second entry, like above 13 or above 14, and then use the stop down here. So that's the easy question. If you cannot scale in and you have a trading range day and you have a strong sell-off, you take a second reversal up from support, breakout below yesterday's range, or you take a second reversal down from resistance, like here below 7, the second failed breakout of yesterday's high. Here, first, second, it's also a double top. Here, instead of this, you buy above that or above this. Instead of selling below this, you sell below that. It doesn't look like a good sell on a candle chart, but on a bar chart, it definitely looks like a reasonable sell. So that's the easy part. So if you're in a trading range day and you want to take stop orders and you're trying to buy reversals up and sell reversals down, but the leg down or up is too strong, you simply wait for a second entry. And I think that really answers your question, because if you're not going to scale in, the other alternative is the one I said. You buy the 10 high, use a crazy stop, like a measured move down based upon the whole range, like 8 or 10 points down, and just hold on, waiting for a bull bar, and then you buy more above a bull bar. We see that all the time, and at the time it never looks possible, but it works. It works, right? Let me just try to find an extreme example. Okay, here. Is it reasonable to buy this high? Yes, it's reasonable to buy that high. And if you buy that high, just put a stop some crazy amount down, maybe a measured move based upon the height of the range. And you could either get out after 2 or 3 bear bars and then buy a double position here, or you simply wait and you buy more above a bull bar and buy more above this bull bar, expecting the market eventually to get back there and get you out, break even on your first entry, and then with a profit on your other entries. So that's a pretty extreme example. A lot of times you get extreme examples. Let me see. They just don't. You just look at them and you say, no, that's not what's going on, but it is what's going on. Okay. Maybe buy the close, right? So you buy and you just use some crazy wide stop below the bottom of the bull trend, and you wait for a bull bar and you buy more, and then you try to get out back at that close. And the market tried once, tried twice, reasonable to get out below this bear bar maybe, with a loss over here and a profit here, but the profit's bigger than the loss. Is this sell the close? Yeah, you could argue it's sell the close. It's really, I think, a pullback from this breakout. But even if you sold the close here and then sold more below a bear bar here, right? So you sell that close and then you wait for a bear bar here and you sell more below. You needed to get 1 tick below your average price to get out break even. Look what the market did. It went 1 tick below your average price. So even if you sold here and sat through this, you would have avoided a loss. As a beginning trader, you cannot do that, because you would just get so upset by the big move against you. But if you're an experienced trader or an institutional trader, if I were trading a fund, that's what I would be doing. I would just doing that all the time. And, I would be just looking for a few trades a day, and that would be the kind of trade that I would look for. And the odds are really high that I would either make a profit or avoid a loss. Okay, question. I'm finding it impossible to get trades on the S&P because it barely moves. I lost 10% of my money trying to scale and scalp, and now I'm crippled with fear as I am with constant confusion. Would NASDAQ be better for me? It's $5 a tick, moves a lot of points, and looks more like the charts on the slides. Or do you recommend another market? I think NASDAQ, what you're saying is good, right? He's saying NASDAQ, the total, your stops, the dollar value of your stops is smaller than the dollar value of the stops in the E-mini, and it trades really well. You can argue, well, Al, a lot of the bars don't even have 1,000 contracts. Is it still reliable? It's extremely reliable. It's arbitrage very heavily with the E-mini, so I think it's a reasonable choice. And in general, it's, I think, more volatile. The word for that is beta. It has a lot of tech stocks, for example, and they tend to move more than like General Motors and IBM. So the volatility, the legs tend to be bigger. So I do think it's a reasonable thing to trade if your account is big enough. Some traders like to trade the QQQ, which is, it's basically it's a stock equivalent of the NASDAQ. So this is the NASDAQ. I'm going to put up the QQQ, and you'll see it looks exactly the same. Here's the QQQ. So stock traders would trade that. But I think that's reasonable. If you're getting chopped up, then I think that it's not so much the E-mini, it's more trade selection. And on a day like this, the first bar is a doji, and I'm saying right from the get-go that today's probably going to have a lot of trading range trading. When that is the case, it's usually better to buy low, sell high, and scalp. I understand, I've been there, 25, 30 years ago. When I see a bar like this, I'd be so upset by all these reversals. I'd be saying, yes, finally it's becoming a trend. I'm going to sell that close, right? That's what I did 30 years ago. I don't do that anymore. Now I look at that and say, all these reversals, we got a big bear bar. Yes, I'm going to buy that close. If anything, I'm going to buy the close or buy at the low, or buy the reversal up. And I think that is what happens when traders start. They're so upset by all the crazy reversals that, they every time they see the market start to go up, they buy, and then immediately it goes down. Every time it starts to go down, a pair of bear bars, they sell, and then it goes up. And you can do that, and you can do that profitably if you use a wide stop and scale in. But if you're starting out, you're not using wide stops and you're not scaling in. And alternatively, it's better to wait for second entry buys on reversals up from the bottom, or second entry sells on reversals down from the top. And sometimes the second entry buy doesn't look like what you want. Trading range day, nothing is going to look the way you want it to look. It's always going to look like the bear legs are leading to bear trends, and they're not, right? And it's always looking like the bull legs are leading to bull trends, and they're not. And, it's better to buy with second entry buys. You just buy above this bar, put your stop down here, and go to Walmart and come back in a couple of hours. And if you're not stopped out, just hang in there, right? You place a limit order maybe to get out with a couple points. You could argue that if you buy above 14 and your stop is below 14, you're probably going to make money, probably going to make a reward equal to your risk. Your initial risk is, down here. Your entry is here, and look where the market ended up, right? So you buy above this, you put your stop down here, and you go fishing for a couple hours, and you place a limit order here, and you come back and say, look at that. It worked. It went one tick above the measured move target, and it allowed you to get out with a reward equal to, not quite, your actual risk, your initial risk is one tick below that, and your actual risk was one tick below this bar or that bar. But if you're at Walmart, you don't know that this occurred, right? You do know that your initial stop is one tick below here. I usually use the low of the bar. The market usually goes from the low of the bar to your entry price to a measured move up. And that's what it did. But, it's hard. You want, you're a day trader, you want to trade and you see all of these reversals and it's just hard to process it. What do I do? What do I do? I bought here and gosh, that's a lot for me to risk. That bar is really big, but the odds are, the market, the bulls are trying to take control. And unless the bears can break below that, the bulls will probably succeed. And they tried to succeed here and here, and they needed one more time, and then they were able to succeed here. It's hard, it's hard to appreciate things that provide clarity, because a lot of times it takes a lot of bars before they reach their goal. And I said at least a couple times somewhere in here that this is probably going to remain the low of the day. And we got a big sell-off, but it still failed to get below that low. And as long as it fails to get below that low, then the odds are it's going to remain the low of the day. I don't do the Walmart thing where I, buy above 14 and disappear for a couple hours and then, have a limit order up here and a stop order down here and take my profit. What I tend to do is buying and selling, buying and selling, buying and selling, and, buying low, selling high, and scalping all day long. If I were trading a fund, I wouldn't be able to, to trade hundreds of contracts in and out for 1 point scalps. I probably would do more of the Walmart thing, buy above 14, and then every time the market tries to reverse down, buy more. Like maybe buy more here, buy more here, buy more here. As long as it stays above this low, I'm assuming I'm right, and that eventually I'll reach some kind of a measured move target. But this is a really upsetting day if you're a beginner, because it's constantly tricking you into buying high instead of selling high, and it's constantly tricking you into selling low instead of buying low. So you keep buying at the tops of things and then getting panicked and stopping out low. And when you're getting stopped out, the market immediately is reversing up again. And, you're selling low. And by the time you get stopped out, the market is, it's going to go your way right after you get stopped out. And I think it's really important. These two bars right at the beginning, red flag, especially coming after, all of this stuff from yesterday. It's telling us it's probably a trading range day. And if it's a trading range day, I automatically enter trading range mode until I'm absolutely convinced it's no longer trading range mode. And that means I only want to buy when it's low. I only want to sell when it's high. And if there's strong bear reversals, I'm going to assume they'll fail and reverse up. So I'm looking to buy. If there are strong bull reversals, strong rallies, I assume they're going to fail, and I'm looking to sell. And it's counterintuitive. It's just the opposite of what you think. But the reality is, you see a couple bars like this after all of yesterday's trading range, breakouts are going to fail. My 80% rule, markets have inertia 80% of the time. Every time you see a breakout attempt in a trading range, it's going to fail. And my 80% rule for trends is if you're in a strong trend, okay, if you're in a strong trend, 80% of reversal attempts will fail. For a strong bear trend, 80% of bull reversal attempts will fail. The market has inertia. It has a strong tendency to continue to do what it's doing. And if it's doing this, don't bet it's going to stop. Bet that it will continue. And look to buy low, and look for reversals up, and look to sell high, and look to sell reversals down. Don't look for breakouts. Okay, hope everybody has a good night.